Hello and welcome to NDTV Profit. You're watching SME IPO Adda, and my company in focus today is Osel Devices. It's a Delhi-based company which is into manufacturing of LED display systems. It also manufactures hearing aid, which are also called assistant healthcare devices. And joining me is Ravi Mishra, who is the chairman and managing director of the company. The company's IPO is opening on 16th, closes on 19th. It's a fresh issue of 70.6 crore rupees. The money will be used primarily for paying of debt and working capital requirement, and the company has a top line of nearly 132 crores in FY24. And to discuss more about the company is Ravi is joining us from Delhi. Ravi, take us through your company's profile, the business model that you have, and the industry that you work in.
Hi, good afternoon. So basically, we are into manufacturing of LED displays and hearing aid, as you have mentioned that. When it comes to LED displays, it's a huge market today in the country and also international. So like for digital displays, India is a $2.1 billion market today. So that's what we are catering to. And what we have done in this case is we are trying to do most of the things within India. Of course, the components are imported, but in terms of manufacturing, and we're trying to add more and more local component to it to make it more Indian product, and which keeps us in a very advantageous position in the market today with the having a leading brand image in the market for that. For the hearing aid, it's basically, as per WHO, the market is around 63 million people in India would require hearing aids, while very less people are currently using it because of course, price affordability and social stigma of not using a hearing aid. Like we had earlier for glasses, people were avoiding to use it. Same is happening for hearing aids now. But going forward with education and awareness, we see a good market coming up for hearing aid as well in the country.
It's interesting that you're into two segments, not allied in that sense, but different segments there. Nearly 63 or 64% of your revenue comes from hearing aid business. Can you give us a sense of the kind of customers that you have in this business, for what kind of growth that you have in this business?
Right. So I will just clarify when you say there are two different line of businesses. So yes, there are two different line of businesses. Once it is an end product, once the finished goods are there. But in terms of production, in terms of manufacturing, and in terms of product development and design, they both comes under electronic segment itself. So we are a technology company who are into electronic domain, and that's how we are able to manufacture, produce, develop, and design both kind of product.
What is the kind of client profile that you have for both your LED display segment and for your hearing aid?
Fine. So basically for hearing aids and both the segments, major customer base for us right now is government tenders and all those. The government sector we are supporting. So for hearing aid, major business for us is coming from government sector, government tenders for Ministry of Social Justice and other things. We have been supplying that. Or rather, I will be able to tell you that we are the largest supplier to the government of India today in terms of hearing aids. And for LED displays, we have mixed customer base, basically, government being a major portion of it. We are also working with large private players, and there are good names under our kitty, basically. So from large entertainment companies to retail companies to broadcast, we have been supporting all kinds of customers.
Your contribution from government is a very high percentage of your revenue, and that also brings in concentration risk, which is there because these are all tender based, and tomorrow a competitor comes in, you can be easily impacted. How do you plan to diversify this risk?
Right. So we are already trying to increase our customer base and penetrate into much larger sector in the country. And to do that, we are developing our partner network and dealer network as well across the country. We are also targeting the international market, and we are getting into international exhibitions also. This month itself, we are participating in two of them, one in Toronto and one in Saudi. Saying so, when it comes to concentration risk, of course, when you have less number of customers, you do have concentration risk. But at the same time, we are positioned very well in terms of government tenders and all with the Make in India and our own local manufacturing. We do get several advantages from the government tenders. So which keeps them in an advantageous position compared to people who have been importing and then trying to get into those tenders.
I'm assuming that that advantage is mainly to do with the kind of domestic content that you have in your products. And the domestic product content is around 46% as of today. How do you plan to increase that? Because you have a large dependence on China as for your raw material and parts.
Right. So basically, when we say that there is a large dependence on China, it is not exactly correct. There are suppliers who would basically be available otherwise from China also. Major components for our hearing aids, though we buy it from China currently, are manufactured by a US or a Singapore-based companies. So due to the supply chain benefit and of course price benefit that we have from China, because China is a large economy and the electronics market is better, their distribution network is much better. So we do get price advantage buying from China, but that does not restrict us. We are dependent on China for our supplies.
So you're saying that these are US-based companies which have production facilities in China, so it's coming from China in that sense, is it?
No, not that way. The components manufactured are US-based, or the brands that we buy and we use in our hearing aid products specifically are basically from China, US companies basically. But the distribution, because the scale of business in China is much bigger than what it is in India, for us to buy directly from manufacturer, our cost benefit is not there. But if you are buying from a large distributor in China, it is cheaper for us. So that's how all things get routed through China, but the products are actually not Chinese.
Okay, give me a sense of the private market here, because currently, if I'm not wrong, for the hearing aid business, you are supplying it to Artificial Limbs Manufacturing Corporation of India. That's a government body, and then and that's as you said, it comes under Minister of Social Justice. But what about the private market? Because you see a lot of products and a lot of private players in this market, especially for the hearing aid market, and because you are at a lower price point compared to those products, how do you see penetration of your product in the private market?
Right. So currently we are also supplying to private market, but in a wholesale numbers, and also we are doing some white labeling for other brands that we are doing. But in terms of prices, since we are manufacturing our own product and all the design is our in-house developed, so we always have a price advantages. And just for the last tenders that we are doing, our numbers are very good, and which brings us better costing and better pricing for us. So in terms of price, we don't see a challenge anywhere from any competition. Yes, when it comes to retail market, because we are targeting to enter into retail market very soon, probably from next year onwards, we will be targeting retail market as well, and we will start to supply our hearing aids and dispense our hearing aids through the audiologist network that is available in India. We have larger competition, which are big brands, and the advantage we have there against them is basically they are all top 5, top 6 brands which are available, which are all imported into India, and the prices are not very affordable for large section of the market. So we basically fit very well into that, and we think that we will be able to provide affordable hearing aids to the masses.
Just wanted to get a clarification here, especially with respect to LED segment. I was seeing the revenue there; it was little volatile because in 22. It was higher than 23, it fell, and then again it went up in 24, if I'm not wrong. Is there a reason for the volatility in the revenues for the LED segment?
No, basically what is happening is LED segment is growing, but at times we are also working in tenders. So sometimes certain tenders basically are much larger in their size. So which basically affects your invoicing and all those things, which gets translated to the end balance sheet. But otherwise business is growing up.
Since you are already into tenders and you have already your order book which is there, what is the kind of order book that you're sitting on for hearing aid and for LED?
Right now, I would not be able to disclose that here, but we have good order books right now.
You did a revenue of 132 crores over 82 crores in FY23. That's right. A good healthy rate. Your PAT was almost 3x up in the same period, and margins around 17% compared to 10.5% in FY of 24. Uh, is 17% the kind of base level margins that you are working on, or it is dependent on tenders and it is dependent on the kind of order that that flows in?
No, the product line that we are in, these are sustainable margins that we are working on. And even for the LED business, we are targeting the premium segment of the market as of now, and we are not competing in the low segment of market. So we can easily maintain the basically margin that we are currently on.
Give me a sense of your indebtedness on the books as of today. You're going to use 6 crores for paying off your debt, but I see that your working capital requirement is much higher, because since you cater to government, the payments are very erratic in that nature. So, what is the kind of working capital requirement that you have as a business?
So I would say with the government sector also we have had good payment receipts basically. So I don't see much delays from the government payments as of now. So far we have been lucky, I would say otherwise. And working capital, of course, yes, because each order is large order. So we have basically catered to orders worth 32 crores, single order worth 32 crores, 28 crores. So we have sustained on those kind of orders. So yes, working capital requirement comes into picture because government does not pay advance and all those things in a normal scenario. So to cater to those, we do have working capital requirements.
And what is the normal receivable days from government?
In general, we have been able to close everything within 90 days.
Okay, and I also see that you have a big creditors outstanding as well, and that's current liabilities. Is that a short-term thing that you do? Is there a cyclicality that comes into play? How is it actually?
No, they are short-term. As I mentioned, our government tenders are at times large. So when you have that large tender, when you're supplying to those large supplies, of course, these debtors will increase. Once the supply is over, payments are done, so everything is normalized.
So, how do you manage the mismatch in cash flows in that sense?
We have bank facilities and all those things available with us. So in terms of limits and all.
At the current capacity that you have a couple of manufacturing facilities for hearing aid and LED displays. What is the kind of capacity that you're working on, and what is and how much your current capacity can take your revenues to?
Right. So I would basically say cumulatively we are utilizing around 40% of our current capacity. So wherever we are, we could basically increase it up to 60% without adding any capital into this. But yes, manpower will be required to manage that. But in terms of plant and machinery, our capacity is almost 60% additional capacity is available.
The current proceeds which you are raising 70 odd crores, 6 crores for debt repayment and 40 crores of working capital requirement, will that be enough to manage your growth going forward, the kind of growth that you have been seeing for last couple of years?
Right. So basically, we have to enter the market, and of course, we are a growing company, and there will be a growth demand. There will be a continuous demand for growth in the company as well. So with the current thing, we can start up and we can get to the next level. And looking at the outcome of it, basically, we will again be looking at whatever is required. We will be raising up further funds also.
Give me a sense of your customer base. We spoke briefly about it at the beginning of the interview. Your top 5 customers is accounting for 81%. That's also a risk which is there for you, and top 10 around 90%, 91%. How do you diversify that risk? That's something an SME is always faced with.
Right. So that majorly happens because in both the segments, I would say whether it is LED or it is hearing aids, we have executed largest of the government orders. So I would say when it comes to hearing aid orders from the government, the largest government order for 28 crores, a single order for 28 crores is done by us. At the similar time, one of the largest order for government for LED display, exclusively for LED display for worth around 31 point something or 32 crores is again done by us. So when we basically join both of them, it is almost a good number of amount of percentage for our whole turnover. So now, of course, 10% comes, the 10% customer itself or top 10 customer itself covers for our major business. That's how. Otherwise, we have rest of the businesses basically spread over into multiple customers.
Normally, when you get these orders, what is the execution time that you have for these orders?
I'm sorry, I didn't get you.
Normally, whenever you get these orders go through government tenders, what is the execution time to supply these orders?
Okay, so we basically are able to supply within 45 to 60 days, 45 to 60 days, yeah. And in general, because based on the availability of stock, we can even start supplying from a week's time.
Okay. I also wanted to check with you on your geo risk also, because your RHP mentioned that nearly 51 or say 52% comes from Delhi area and UP accounts for 27%. You mentioned that you're expanding yourself across the country. What is that plan that you have to expand across the country?
Okay, so when we say our concentration is within Delhi and UP and all those things, because that does not mean we are only working in these areas. Our geographical presence is across the country, and we have been supporting and supplying to multiple customers across the country. Majorly, the billing customers, billing address of the customers are in these areas. They are concentrated here. But when I say cinema chain, so while we are billing them to in Delhi itself or Delhi NCR, their installations are across the country. So when we are working with the large broadcasters in the country, while their billing is happening in this place, in Delhi itself, but all the studios are across the country from Ahmedabad to Imphal, from Kanyakumari or Cochin to Ladakh.
Oh, okay. So it's basically the billing address which is
invoicing addresses and all those things.
Okay. My final question to you is, you're into this unique business tool, LED display and hearing aid. The LED business is also very, competitive and very margin restrictive in that sense. If my understanding is correct, how do you manage competition in this segment?
Right. So basically, what we have done in here is, of course, there is a huge competition because major portion of LED business is happening with the import market from China. And prices, China is basically a cheaper price products that keeps coming in from China. So they are our competitor. But we are not putting ourselves in that range wherein we are competing with those Chinese importers. We have in fact put ourselves into the mid-range wherein the top brands are there, then we are there, and then there's a lower segment of customers. So we both have, like when we come to the lower segment of the suppliers importing from China, the customer base is completely different from the customer base that we cater to. So we don't see much of a challenge in that. And going forward, especially with government tenders, we have certain advantages which I have explained before. And with the scaling up, of course, I believe that we will be able to divert major portion of business going to China to us, which will basically improve our numbers also.
And is there any plan to backward integrate to get those that equipment or those parts made in India?
Yeah, we are already working on that, and we have plans for backward integration. Like we have the LED components which are coming in from China, the LED lamps and all those things. So we have plans to set up a LED packaging unit here itself in that, and we have already started working on that. So we will be announcing that soon.
How do you see your business metrics or revenue metrics, moving forward? Because currently it's between hearing and LED, between 34 and 36, 64 and 36. So going forward, is that the same ratio that you see, or there is going to be some change in that?
Right. In terms of top line, I'm looking at LEDs, which is growing faster because that's the larger market, and the ticket size for LED sales is much bigger than what hearing aids could do. But in terms of profitability, yes, hearing aid is going to contribute in a major profit, major margins basically. But in terms of numbers, in terms of top line, LED is growing very, very big because there are large tenders from smart cities, what you call a sports event, petrol stations. They're all going to convert. All the billboards that you see, which are static now, and they are using vinyl printouts and all those things, which is pollutant actually. They are not good for environment also. They are technically started to getting banned. So these things will also be getting converted into digital board, which will basically create a large market segment for that. So LED size, the market size for LED is much bigger than what hearing aid is. So in terms of top line, LED will be going further.
Just to understand, what is the kind of margins that you have in both the segments?
Well, currently, I would say we are working with around 25-30% gross on LEDs and approximately 40 on hearing aids.
Okay. So, the contribution of hearing aid to your margins and profitability will be much higher as compared to LED.
Right.
Ravi, it was a pleasure talking to you today. Thank you very much for joining us. Your IPO is opening on 16th and closes on 19th. It's a fresh issue of 70.6 crores. Thank you for joining us on SME IPO Adda.